So I think there's a very clear easing bias across the region, but central banks are definitely facing different challenges. So for example, in the case of Bank Indonesia, they're really still worried about external financial stability, the level of the currency, they still see room for appreciation. So they're still worried about risks of outflows. And given that they're kind of pursuing a slightly higher fiscal deficit this year, an increasingly higher fiscal deficit, they need to attract foreign inflows to finance that. So I think Bank Indonesia is going to remain a little bit cautious for the rest of this year, but other central banks definitely have more easing to go, but perhaps a bit more limited compared to earlier in the year.
Okay, and I suppose it depends in large part, too, on what kind of help they're getting on the fiscal side of town. I mean, we think of somewhere like Thailand, which has had a very decent fiscal stimulus package, but where do you see areas that could do more on the fiscal side?
I think you're completely right to say fiscal policy has to be the main thrust for economies across the region. So particularly in the Philippines, we think actually the balance of easing should be on the fiscal side from here. There's still a little bit more for the government to do in terms of cash assistance for vulnerable Filipinos, in terms of assistance for businesses. And until we see more fiscal measures, additional monetary policy easing really won't do that much. So we think the central bank will be a little bit patient until it resumes easing, waiting first for the fiscal side. In other places, in Indonesia, the fiscal easing compared to other countries has been relatively minimal, but that's ultimately for a good reason because the country doesn't have the same degree of fiscal space as other economies, and that's particularly because they have a relatively high share of external debt, even though they have relatively low overall public debt.
Right, Joseph, good morning. Then we're also joining into this discussion. How much pressure does monetary policy, fiscal policy in the region put on the currencies in this part of the world? Because we have seen a lot of downside open up for some of these specific currencies. And the reason I ask you that is because that story is linked to the hard forex reserves that a lot of these countries need to cushion themselves to external shocks, essentially.
That's a great question. And the good news is that external balances, FX reserves, a lot of these metrics have improved over the years, particularly compared to previous economic crises. However, countries with current account deficits have a little bit more to worry about when it comes to currency risks. And particularly in this part of the world, it really is Indonesia, which runs a current account deficit that perhaps while improving compared to last year, is still on the high end by historical standards. And that's precisely why the Indonesian central bank has to be a little bit more cautious with the policy rate, especially because it's buying bonds in the primary and the secondary market, which is actually a type of liquidity injection and easing. But on the other side of the spectrum, we have central banks like in Thailand, where actually they're again concerned about the strength of the Thai baht, given that the economy continues to run a current account surplus. So actually, when it comes to currencies, we're seeing very different reaction functions across the region.